Hello guys and welcome to Hackman Traders. In this video I'm going to be showing to you guys what should you do when the stock market is trading in negative, when there are when the news arises that are against the investors, that loosen the investors confidence, that scares the investors, that scares the buyers and make them sell the stock, make them sell their due share in the stock market. So in that case the stock market would fall. So what should you do in that case? So what strategy can you apply in that situation? So let's get started with the video. There are a certain strategies regarding this, so I'm going to showing to you guys what are those right now. Now the first strategy you can apply is the what you can apply is the risk margin. So risk margin is basically that when the stock I've explained to you about in the previous video about stop loss. So it is generally the stop loss that you have applied for that you have applied when the stock market was trading, when you first invested in the stock market. Now let's say if you have invested in this part, so as the price is going up, you are lifting the trend line, your stop loss. It reaches down again, went back up again. So you would have placed your stop loss right here as it was trading right here. As it comes down in value, you close your position right here and gain this much profit. So this is stop loss. So sorry, this is also called trailing stops. Now this is the first method. This is a very useful method you can use while trading in the stock market, because this value is used by this strategy is used by most of the traders, most of the investors, when they are trading in the stock market. Because without this strategy, the stock market is not that much great, because it gives you a clear insight of where this trend will head and where it will stop. So you should use this strategy while you're trading in the stock market. Now as you saw, now let's use another strategy, the support and the resistance level. Now you can see that was the trailing stops. Now I would use support and resistance level. Now you have bought at this level, let it go up. Now again it came back down, again it came, you thought it would go down, but held to it and it didn't. Again it went back up right here, and again it came back down, and when it crossed this area you sold your stock. You at this level, using this strategy, I do not recommend it, because you can see you bought at this level and sold exactly at the same price. You only pay the broker his commission, so you lost your capital, and plus you have invested for this much time. But by the way, my chart is in day chart. I use it in day chart, so it is a day chart, and you can see that you've only paid your broker while gaining nothing. So this strategy I do not love, because I do not like using it. Sorry, I do not like using this strategy, because you can see that I do not recommend it, because you have paid your broker and you didn't gain anything. You have lost your you've lost your amount while paying the broker. So, and you have waited for this much. What would happen if you have invested this your capital in something else, in another stock? So you could have gained by this one. So this strategy is not good right here. Maybe it is good in some place else, so it does not fit right here, so I'm going to neglect it. Now the other strategy that we can use is that, where is it? Yes, now let me show you. Let's say you have bought it right here, the stock right here. What is the price, closing price? Let's say you have bought it at 23.5. Now let's say you want to sell your stock with 5% loss, multiply it by 0.95. You would sell it by 22.32, which you can see it closed at, where is it? It closed at 23. So you already sold your stock at this level, at this point. Now let's say with the rising prices, you want to keep your loss at, let's say at this level you want to keep your loss at 15%. Now what is the closing price? 24.95, 20 sorry 24.95 multiply by 0.85 equal to 21.20. So where could you basically sell your stock? 21.20, you could have said it right here. So at this level 20, where is it, it didn't go below 23, so you could have said it right here. So this is I think I've given too much stop loss or too much reading. So let's give it again. Where was it? Rest right here. 24.95 multiply by 0.9. I guess 5% is the best. So 23.70. Where is it now? I guess it comes in this range. So you can use this value as well, and use a risk margin. And one more thing as well, when the stock market is trading in negative, do not invest your capital at that time. Withdraw if it's not a greater loss. So withdraw your capital and save it while the stock market reaches to its lowest low. So when it reaches to its lowest low, then at that level be greedy and invest in the stock market. Buy the stocks and hold them for a certain period of time until they give you much profit that you're satisfied with it. So invest only when you see that after this point it would give me much more value, then I won't. And hold your stock for that for up to certain period of time, and then you would make profit from it by investing with the help of that method. So save your capital while the stock market is trading in negative until it reaches to its lowest low. So that is the strategy. That is the only strategy that I like. Beside the trading stop, that is the only strategy that I like when you're trading in the stock market. So there might be any other strategies as well that I've not mentioned here. If you guys knew it, then do mention it in the comment section below. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.